today's stream would be more focused on how to be using Coinalyze because I find that to be the most convenient and easy to use interface compared to others. So let's go over that, right? First, let's go over how to load these indicators and these data factors, and then we'll go over what actually do these mean, right? So let me switch the screen share. Yeah, so can you see the screen now? The browser screen? I want quick responses in the stream, right? Let's not waste time. And if I ask a question, reply quickly. Okay, that's good. So this is Coinalyze. I have indicators preloaded. If you log in and you load up indicators, they remain the same. So it's a good way of saving time when you get hold of Coinalyze. Create an account so that every time you load up a coin, you don't have to load up every single indicator every time, right? But for now, I'll have to remove all these so that we can start from scratch. Titles, indicators, yeah. So I'll get rid of everything. Yeah. So this is how your Coinalyze chart would initially look like. So you'll start with, let's say, BTC, USDT, and most of the time to get every data, including spot and perps, try to go with the perps pairing, right? I like to go with Binance pairing. So you go with BTC, USDT, perp, Binance, right? You do that, and I'm a dumb person because now I'll have to delete these again. Sorry. Let me do it quick. Let me remove all the indicators. Now, once you have the pair opened in front of you, the next thing you do is load up the indicators, right? The ones that are the most useful and they provide you some actionable data. Number one out of those is the open interest, right? So another thing that Coinlyze does good is, like, for example, if you're using platform like Trading Light, it would give you data of individual exchanges, right? It wouldn't aggregate the data for you. It wouldn't combine the data of every single exchange for your convenience, right? What Coinlyze does good is, so instead of me having to look open interest data of Bitcoin on every single exchange, I'll just do this, right? I'll type HBJ and I'll go towards HBGR and where is the open interest? So, okay, it's been a long time since I've looked at where did the open interest go? Stablecoin, visible. No, 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 no. Am I missing something? Kind of aggregated open interest. Yeah, sorry. I aggregated and you go with the stablecoin, right? So will this be recorded? Hopefully, Cypress is on the stream, right? Yes. So the first thing, I'll even mention this indicator on the chat, is aggregated open interest and go with the stablecoin margin contracts, right? So there are two types of future contracts that you can take on your exchange. One is the margin contract. One is the stablecoin. Stablecoin is where you have the USDT based pairings. The other one is where you keep your alts or your BTC as a collateral to take the trade, right? So, for example, if you're taking BTC pairs or if you're taking ETH pair trades or BNB pair trades, those are called margin contracts, right? On the other hand, but the highest volume that you get on most of the pairs is from stablecoin. So margin coin data you can pretty much ignore, right? So if you want some most of the data you'd get from stablecoin margin contract, so that's the one you should be using. I'll write that in the chat as well. Aggregated stable coin margin contract. So this is the first one that gives you data about the open interest, right? Don't worry, we'll go over what open interest means, what it tells, but for now we are just going over how to pull these indicators to your Coinalyze interface, right? So we have done open interest. The second one we'll need is CVDs, right, which is cumulative volume delta, which kind of tells you net buying and net selling on a particular pair, right, whether it's spot pair or a perps pair. So we'll start with CVDs. Again, we'll go with aggregated ones, right? You kind of need data with convenience, right? You don't have to look at CVDs of every single exchange, so you rather go with the aggregated one. Even though Coinlyze does give you option of looking at specific exchange CVD as well, right, which is the top one, cumulative volume. So you go with HBGR And the first one you'd get is this aggregated CVD spot. And the second one you'd get is aggregated no, sorry, open interest we have already done. So we now need CVD FUTs, but with the stablecoin margin contract, similar to what we did on open interest, right? You kind of don't need the margin contract because the volumes coming in from the margin contracts aren't that much for you to be focusing on, right? So this is the second CVD we'd get. So I'll type these two indicators in the chart as well. So the one is aggregated spot CVD. The other one is aggregated FUTs CVD along with FUTs stable coin margin, right? FUTs stable coin margin CVD. You can also combine these two together to save space, which I usually do. So you can do is move to existing pane below. So now you have spot and CVDs, perps and spot CVD in a same panel. To differentiate between them, you can change color of one of them to have an idea which one is spot, which one is perps. It kind of gives you a more space to be playing with. And the last one that's useful is the funding, right? Same goes for funding. Instead of using individual exchange funding, you go with the aggregated one, right? So aggregated funding, let's find, yeah, aggregated funding rate. Another thing you can look at is liquidations as well. For that, you go with the same. Under the HGR heading, you'd have liquidation panel as well. You can go with the stablecoin margin contract, but I don't usually see how liquidations could come in as a confluence for you to be taking a trade. Sometimes they do when you are playing shitcoins and stuff, but most of the things we'll be focused on this stream is open interest, CVDs, and fundings, and how to be using that instead, right? Do we get this data on TradingView too, or it's only coinalized? So on TradingView, you don't get cumulative volume delta, right? So you don't get CVD data on TradingView. Recently, they did add open interest on TradingView, which is pretty accurate, but it's only on Binance perpetual pairings. So you don't get the aggregated open interest data on TradingView, neither do you get individual exchanges open interest data other than Binance. So the only data you'd be getting on TradingView regarding open interest is Binance only. So I'd say go with Coinalize, right? Even though TradingView is convenient, but it hasn't yet integrated all these things. So yeah, that's pretty much it with loading things up on your Coinalize interface. If you have anything to ask about this, you can, or else we can move on to explaining what open interest is and how to be using these things. Nothing? Okay. So now let's get back to TradingView because I'd be able to explain there a bit better. Change stream. What's market doing? Ah, shit. We have a trade coming up. Should we take? Or should we focus on the lesson? Look at this clean mark deviation and reclaim. We can try it with a very tight stop, but okay, let's wait for this 30 minutes close. Okay, let's wait for this 30 minutes close and do remind me after the next 15 minutes to be checking back at this trade. But I do like this. Maybe by the next 30 minutes close, it's already gone. But yeah, let's get back to the lecture. So let's start with open interest. Open interest. So let's do a heading here of OI. OI is basically the number of margin contracts opened on a particular asset, right? I'll continue typing the definitions in the chat as well. Number of margin contracts open on an asset, right? So when you say that the OI is increasing, it means that the number of margin contracts on that pairing is increasing. And when you say that it's decreasing, it means that already existing margin positions are closing, right? Which one of those, and they can either be long or short, right? Now, which one they are, that's what we'll study in the next thing, right? So we'll basically, so one thing is OI alone doesn't tell you much, right? A lot of people, like OI is also one of the most misunderstood concept that gets thrown around easily, right? People tend to believe that high OI means bearish, low OI means bullish. and they also build some other stories around OI, but OI alone doesn't tell you much unless it's something extreme, right? Like for example, if OI has jumped 20-30% in a single day on BTC or a high cap, that's something alarming, right? That then OI itself could tell you a story, but unless it's something extreme, OI alone doesn't tell you much unless you combine it with factors such as price, such as CVD, such as fundings, right? So we'll go over those scenarios. First one is, and you don't need to learn this, you just need to use a bit of sense and try to ask yourself a few questions. Also, another thing, while studying these OI examples, we'll assume that the spot market is constant, right? So basically, to move a price, there are two markets behind it, right? There's also options and margin contract. Options market behind as well. But since we are in crypto only and we'll only talk about futures and spot, so there are basically two markets, spots and futures market moving a price. And for this topic, we'll assume that the spot market is either non-existing or it's either constant, right? So it's the only futures market that's causing this price change, right? So the first scenario we'll go with, considering the spot market is constant or it's either non-existent, is that the price is going up, right? And for price, I'll use P, and OI is going up as well, right? What this basically tells you, now try to make sense of it, right? Instead of memorizing it, open interest is number of contracts, right? And the number of contracts could either be longs, the type of contracts could either be a long or a short. And if the increase on those number of contracts is making the price go up, what does that tell you about the positions, right? What does that tell you about the market positioning? More perps longs, right? So there isn't much to be memorizing. I see a lot of people just memorizing those charts, whereas things just make sense on their own, right? You just need to assume that the spot market is consistent or non-existent, and you just drive the story out of this data. So this means longs increasing, right? There are more longs entering in the market. Second is, let's say the price is increasing, yet however the OI is decreasing, right? So how can the number of contracts decreasing can lead to the price increasing? What sort of market participation could that be, right? Shorts closing, because when you close a short, you're basically longing that particular pair, right? To close a short, you counter it with the long, and closing shorts basically lead to price going higher, right? So if price is going up and OI is going down, it's basically shorts. It's either shorts covering or shorts getting forced out, which is like liquidation, right? It's very difficult to type this way, to be honest. Liquidation, if this is readable. How do you know whether it's covering or a forced liquidation? You kind of judge it by the nature of that move, right? Like for example, if it was an impulsive price up and an impulsive flush on OI, that's more of liquidation. Whereas if it was just a gradual increase in price and a gradual decrease in OI, this is more of a shorts covering, right? Where people are intentionally closing their shorts due to whatever reason, right? On the other hand, if it's impulsive, it's more of liquidation kind of a thing. In either of the cases, it's the shorts that are decreasing on the market if the price is increasing and OI is decreasing. The third scenario is, now we go with price decreasing scenario, right? So one scenario is price is decreasing, but on the other hand, the OI is increasing. What does that tell you about the market positioning? How can increase in number of contracts make the price go down? Shorts opening, right? The more you short, the more price goes down. So it's shorts increasing. The fourth scenario and the final one is price going down, but the OI is also going down. How can number of margin positions reducing lead to the price going down? What sort of positions would that be? More shorts? No, man. If it was more shorts, anything that's more, either it's more longs or more shorts, it would increase the OI, because go back to the definition of open interest. It's basically the number of margin contracts on an asset. It doesn't mean longs or short. It's just the number of contracts, right? So if you are saying that it's more shorts that leading to the price going down, then the OI should have gone up, not down, right? So it's either one of things reducing. It's either longs reducing or it's either shorts reducing. So shorts reducing actually makes the price goes up, so that cannot be the case. So the case here is that the longs are reducing, right? The longs are closing, the longs are covering. which makes the price go down. So if like a big size long TPs or it closes, it sells the price down, right? Because a long that gets closed converts into a short, right? So yeah, these are four scenarios, and that's how you judge OI based on just price alone, right? Obviously, you can include CVD as well, right? For example, you can use perp CVD along with this as well, and I have shown you how to access perp CVD through Coinalyze. And most of the time, it aligns with whatever we talked about, right? So, for example, if price is going up and OI is going up, which is basically longs, then you make use of CVD to also confirm your bias, right? Because in reality, the spot market is not consistent, right? To in these particular conditions, um, we did assume that the spot market is either non-existent or doesn't is constant, but actually it isn't, right? And in that scenario, then you look at both of the CVDs to draw the conclusion along with price versus OI as well. So yeah, meanwhile, I take a small water break. If you have anything to ask about OI, feel free to do so, and then we can move over things like a few of the scenarios based on OI and how you can have directional bias based on OI, and then we can move on to fundings and other things. If you aren't going to, can you explain scenarios of different time frames to use these on? Explain scenarios of different time frame. What exactly do you mean? Rephrase. Okay, we're selling into the CPI news. What's Mog doing? We had to take a long on it, right? If the 30 minutes closes over. It was good to be waiting on this 30 minutes close. Why you always look on lower time frame? These flow factors, 90% of the time you look on 5 minutes max. That's it. The higher time frame flow data doesn't give you much actionable, to be honest. So it's most of the time 5 minutes max, 10 minutes. When you are waiting for deviation and when not, for example, why you look for deviation on the smog trade to take out low? Why look for deviation on the smog trade to take out lows first? Where are the lows? It's just a deviation reclaim setup. So when things are trending, you wait for it to consolidate. You wait for a fake breakdown to trap shorts, and then it runs back into highs. That's the setup, right? Uh, but this stream is more focused on learning about flow side, right? These things I'll go over the next session we have on Friday, I guess. I'm assuming the things about OI is clear, right? If you people give the go ahead, we can move on to some of the scenarios that I could probably discuss. All good? Okay. Let's go over scenarios quick, and then we can have a few minutes break for the CPI data. If I had known that we had CPI data on Wednesday, I wouldn't have streamed at this time, but it is what it is. So a few of the scenarios that I have is one thing that's important to learn is increase in OI doesn't necessarily mean it's bearish, right? So for example, trend, how does a trend develop, right? Trend develop when there is a mass market participation in that particular pair, right? And how does that mass participation occurs? It occurs through spot market, it occurs through perps market, right? So when we are talking about perps, and if in trend the trend occurs due to mass market participation, it means that there would always be OI pile up when things are trending, right? So actually, you see the most amount of OI pile up when things are actually trending, right? When things are ranging, when things are just bleeding and they are not favorable, and the conditions are not favorable. Those are the conditions where you'd see OI being at lowest point and OI not being piled up on pairs, right? So it's actually most of the time kind of opposite, where people tend to think that more OI is bearish and less OI is bullish, while most of the time you would profit from a trending long. Sorry, you would profit on a long from a trending price action is actually when there is a good OI build up, right? So people tend to believe the opposite. OI alone doesn't tell you much. I have told you that before. Now, few of the things, like for example, you have a alts run going on, or even not alts, let's say BTC or any trending asset you have. This is how the price looks like on a good trending asset, right? So I label this curve with P. um and then we can look at OI also doing something like this, right? This is OI, and even the CVDs, including both spot and perp. So I'll label that CVDS, and another CVD I'll draw CVD perps, right? I label that with a P. So this is a good trending price action, right? Regardless of how up the OI is on the day or how positive the funding is, I won't even, would want to counter this, because this is a strong trending price action where every participant is in line with the trend that's going on, right? So even if OI is up like 15-20% on the day, but it's this healthy looking, with it's just a gradual increase along with price. There are spot bets supporting the perps bets. There isn't not anything bearish, right? This is actually a really bullish trend, and this is one of the scenarios where I just start to chase that trend up, right? So a lot of shitcoin calls, momentum calls that I give for the group. Like, for example, I remember the last call I gave was maybe on TRB, on which we got like a 4-5% move. Unfortunately, it didn't move much. But most of the time, when you have trending shitcoins, which give you similar data where the price is trending up, OI is going up, CVDs are pointing up, those are good momentum plays, right? Those are good trending price actions, and those are usually which you should chase instead of fading, right? A lot of people consider these as bearish. They are like, there is so much OI piled up, and it's also one of the reason why people remain sidelined in an uptrend, right? Like for example, let's say BTC goes into an all-time high rally, which I do hope we do get, and what you would see is for first few days, everyone would profit from the breakout. Then after few days, you'd start getting to see some terms thrown out where people would be like, so much OI has piled up, the funding is really positive, you shouldn't buy right now, you shouldn't be long right now. I'm actually swing shorting because there is so much of OI piled up, while those people would keep on getting squeezed out, and those people would keep on remaining sidelined just because they are using this factor not according to how it is meant to, right? So OI alone doesn't tell you much, and if it's actually going up along with a trending price action, you should rather chase this trend instead of fading it, right? Regardless of how up OI is on the day. So one of the bullish scenarios where you can judge just by looking at OI and few of the other factors whether you should fade the move or it's actually strength is this, right? If OI and CVDs go into the same direction along with price, it's a trending price action. It could go in both directions, right? For example, if you just invert everything, and yeah, you won't be able to read these letters since they're inverted now, but you get the point, right? If even in a downtrend, a strong downtrend that you shouldn't fade and you shouldn't knife catch is something that looks like this, right? Not this. OI should actually be trending up, sorry. So you could not just invert it. So OI going up and rest of the things pointing down is actually a strong downtrend where people are shorting that price. Spot is selling, the price is going down. That's a strong downtrend that you shouldn't fade unless you start to see some spot strength. You start to see some shorts that could be getting offside, or some obvious event that they are shorting into that you can start to fade. Unless it's either of those, you shouldn't be knife catching such price action, right? So strong trending price action comes with increase in OI, whether it's a downtrend, whether it's an uptrend, right? And OI increase doesn't necessarily mean bearish unless it's something really extreme, which we did say in the start. Like, let's say OI is up like 30-35% on a high cap, then regardless of what the trend is or whatever the other factors show you, it is kind of a caution trigger, because OI being up this much and close to all-time high a lot of time signals caution. Other than those extreme values, 90% of the time OI alone can't tell you much unless you combine it along with the price action and the factors such as CVDs, right? So we have CPI data in exactly 1 minute. So let's first look at that. And meanwhile, if you have anything about the trend gauging thing we talked about, and how do you gauge a strong trending price action, you feel free to ask any questions you have. The only issue is that that MOG is now closing 30 minutes with a confirmation, but now you also have CPI. So do we really want to enter a new long right when CPI data is coming? Because this is a really good looking setup. Probably I'll miss this. Fuck. What's the numbers? Did we get lower inflation this time? Hi HPJ, will this be recorded? Yes, it's recorded. Okay, our positions are back in profits. Sol and Bonk. I'm mad about this. This was such a clean deviation reclaim, but it came with CPI numbers. So, and I'd be mad on the smog thing. It's only like once a day you get these reclaim setups, and they are always like 90% accuracy. But I ended up missing this because of CPI. 2.0.1 above. Are you saying CPI came in higher than expected? Let me look at the data. CPI is 2.4%. Expected was 2.5. Core CPI is 2.8. Expected was 2.9. So yeah, they're both coming in lower than expected. That's nice. Not bad. Nice. And I'm mad about Mog. A good 3% move already, but we have Bonk and Sol to pay us. Sol is back in good profits. Bonk as well. Let's see. Wasn't it 2.3 the like the previous month? Maybe. I was on holiday, so I exactly don't remember the number, but it doesn't matter as long as it's lower than what most of the people expected it to be. It's bullish, even if it's higher than last month. Chill guy. Chill guy did sweep Monday lows. AI16Z, chill guy, they're giving like the strongest bounces. Let's look at AI16Z. Wait a minute. There's alert that's ringing. Ah, I think this could be a good long, but uh, a bit aggressive. But swept Monday highs once. Didn't reclaim, now attempting for the second time. Let's look at the flow. It actually looks good. Hmm. Hmm, 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 hmm. Gl- Where's my phone? Fuck it. Hmm. BTC just retested previous all-time highs. Good. Okay, let's get back to the lecture thing. We'll look for new plays after like US session. So I'm assuming that everything about the trend gauging thing we talked about is clear now. Where's the trend drawing that I did? Yes, so let's get back. So one thing is, and to summarize whatever we talked about, trend thing is that it's normal and actually necessary for OI to increase in a trending price action, whether it's a downtrend, whether it's an uptrend. And it's usually a good signal if OI is trending up along with price or trending down along with price, as long as it's supported with strong CVDs trending at the same direction, right? So it's a good trending price action. It's nothing to be bearish on. It's actually a trigger for you to start looking for triggers to be chasing that move, right? Instead of fading it, which a lot of people tend to do. They are like, oh, OI has gone up, let's short it. While it's a strong trending price action that you should try to ride the trend instead of shorting that move, right? Is this being recorded? Yeah, it is. So that's one bullish scenario where you have a trending price action, right? The second one we'll talk about is what other scenarios I could have. Yeah, another I have where the price does go up, but it's most of the time bearish to me, which is that you'd get like an impulsive, either a news based move or just like few impulsive candles move up. It's not like a slow grinding move. It's rather an impulsive move up. And once you have moved to a certain resistance or a higher time frame supply area, the price tends to do something like this. And then when you look at the flow initially in this part of the move, we can do this with black. So when you look at the open interest at this initial part of the move, how can I change the color again? Yeah. So, yeah, I cannot. So open interest at the initial, can't see your drawing. You should be. Because I am sharing the trading view screen. Can others see the drawing? That's good. Probably something on your end, brother. So when you look at the open interest at this initial part of the move where where you got most of the increase in price action, the open interest either stayed flat or actually went down a little, which means that it was either just due to someone bidding heavy on spot, or there were some shorts that got squeezed out that led to this move up, right? And then at this later part of the move, where price hasn't gone up much, you start to see OI trending up, right? OI going up like 10, 15, 20%. Discord bugging out again. Is it the case with others too, or is it just few people facing the issue? I can see it either, just a black loading screen. Okay, I'll try ending and starting again. Can those who were not able to see before able to see now? Yes, now it works. Okay, that's good. Uh, Give me a minute. So the thing we were talking about is one of the bearish scenario when you get a move up on the price and you also get a move up on OI. Yet it's most of the time to me is bearish is when you get rather a impulsive move up instead of a slow grind. And when you look at the OI, that OI on most of that price increase either stays flat or go down. And when price starts to like distribute right at some higher time frame resistance or a supply area, that's where you start to see some decent increase in OI, which kind of most of the time tells me that this move isn't where a lot of market participants are a part of. Instead, now they are trying to chase because there wasn't any OI increase earlier. And now, in this last stage of this move, people are trying to chase the move and hoping for higher and FOMO longing right into resistance and some spot sell pressure area, right? This is to me bearish. Where, on the other hand, the previous scenario where we talked about where we got a gradual increase in price and a gradual increase in OI, this is something that's bullish to me, and the scenario on the left is something that's bearish to me, right? So the scenario on left isn't something I would chase, but the scenario on right is something that I would look to chase and not to short, right? Where something that something like left comes up, that's something you'd want to short instead of chasing, right? um so yeah, this is one of the scenarios I had. Another one I have is when the price is going down, right? In that particular and most of the time when the price is going down, I don't like to like knife catch it unless you get some sort of confirmation, especially if, for example, in that downtrend the OI is going up, right? A lot of people count that as bullish as well, right? So people are like, oh, people the market participants are shorting, those shorts must get squeezed and let's long just because there are shorts appearing. It doesn't work that way, right? Just as longs can keep profiting in an uptrend, similar to that, shorts can keep profiting in a downtrend as well, right? What's there that could make those shorts squeeze if the price action remains weak and if the FUD that's there remains there, right? So just don't knife catch a price action just because someone tells you that there are a lot of shorts coming in. Shorts could keep on profiting just as longs, right? Now, which one of the scenarios I do sometimes look to fade when there are shorts appearing in the price action? Those are usually when those shorts are approaching on downward price action closer to an event, right? Like for example, one of the scenarios I could remember on top of my head is a month or two ago. We had a Powell speech on a Friday, if I'm not wrong, and he started the speech with some uncertain and talking some about some uncertainty of the economy and some measures to be taken, right? And that's where you start, and we were already bleeding on that day even before the speech, right? So as soon as conference started, you could see that the price action that was looking like this, now closer to the conference started to get flat on the trajectory. Right now it was come a lot of majors and alts were coming close to a support while the conference was going on, and ever since it started OI was ramping up in the slow bleed which was now starting to cool off, right? which kind of tells you that people are anticipating something bearish to come out of the conference and they are shorting heavy into a support area. Now, what do? You do nothing, right? You just wait for the conference to end. In case if there is anything actually coming bearish, then in that case, these positions were right and they profit and you just stay flat. On the other hand, if the conference ends with Powell not saying much about anything, not saying anything significant, in that scenario, you max long things because all those shorts that were built up in spite of that conference, if that conference ended up being nothing burger, what those shorts would do is those shorts would begin to cover, right? Those would begin to cover, those would begin to close, which would lead to a good squeeze and a cover rally up, which pretty much happened that day, right? So conference ended. I think we longed like Sol and BTC on the day on a good support with a very tight invalidation, because if we hadn't pushed up right at the conference end, the idea would have been invalidated and you would have gotten out at a small loss. So we longed with a tight stop, and as soon as conference ended, you could have seen those shorts appearing during the conference. And once the conference ended, all those shorts covered and the price squeezed higher, right? So these are one of the scenarios where most of the time I don't like to knife catch just because shorts are appearing, because as I said, shorts can keep on profiting in a downtrend as they can in an uptrend. But there are certain scenarios which kind of become obvious to counter, right? Scenarios where people are shorting heavy into a FUD, into a macro event, into something that ends up being nothing burger, right? Ends up being not as bad as people expected it to be. And in those scenarios, if you see a lot of shorts piling up, then you can expect those shorts to cover and the price to reverse. And those are the scenarios um, where you can place counter trades and play reversals and try to knife catch those things, right? So yeah, this is another scenario. So most of the time you stay away from a downtrend, that's strong trending downtrend, where OI is going up and price is going down and the CVDs are going down as well. But in some of the scenarios where people are shorting into some obvious event and you can feel that through the flow, how can you feel that through the flow? Through judging OI versus price, right? Which we talked about a while ago. And if once you confirm that, that's where you can play some counter trends and some reversals, right? So yeah, that's all I have on OI, to be honest. Now we can move on to funding rates. If you people understood whatever I said on OI. Meanwhile, let's have a quick look on market. Market's looking decent, man. Our Sol position is looking good. Bonk is looking good. Fuck Mog, man. 6% move with just a 3% stop. We could have gotten some nice profits. These are like, focus on these setups in coming days. It's Aztec special, learned from him, and they work with 90% accuracy, to be honest. And best way of chasing a move. A lot of people feel uncomfortable when things are going up on how to long, when to long. You just keep longing these deviation and reclaims. Works very well. Okay, coming back to the lecture thing. If there's any confusion you people have, feel free to ask. And if things are clear, do reply to that as well, because if I am putting in this much effort, the least you could do is reply to when I am asking things. Oh, I closed by mistake. Wait a minute. No, I wasn't asking for a thank you. I was asking for whether it's clear or not, because I hate to be teaching a screen, right? So far there is no interaction. People are dead, and that's also one of the reason I don't hold these teaching sessions, because it's just me speaking in front of a screen. I rather prefer interactive streams, which we do every day, where you can actually talk to people. So yeah, let's get to funding thing now. We have gone over open interest. Um, what's CBD? If you were in the start of the stream, we went over all these concepts, right? OIC, CVD is cumulative volume delta, and I did tell you uh, how to fetch that data through Coinalyze, right? Go higher on the chart. I've mentioned what exactly to type on Coinalyze to access CVDs. So it's basically cumulative volume delta, and when you look at aggregated cumulative volume delta, it kind of tells you aggregated net buying and selling on a particular pair, whether it's spot or perps, right? Kind of gives you an idea. It isn't exact, unless you combine it with other things. But it gives you an idea on how the net buying and selling on exchanges are looking. I'm taking notes and learning a lot from you. Yeah, I appreciate that. But the point is, you need to reply, right? I cannot keep on talking to a blank screen. Now let's move on to fundings. He was having a small water break. So let's go over funding. Funding is also another one of the most misunderstood concept that we have in the space. Um, we start as we did with open interest. So funding rates, you start with definition. What's funding rates? Why are they there on your exchanges, and why do you have to pay or receive as well? So you could also receive fundings, right? Another misconception is that you always have to pay funding. In a lot of scenarios, you actually receive fundings as well. So what's actually funding rates and why do they exist there? um okay, any guesses before I give you the exact definition of fundings and why do they exist? Balance the market, balance long shorts, balance out long and shorts to cover the difference between spot and perps. It's like a bookie, the spot perp balance, it's exchange way to balance long short. Yeah, exactly. No, sorry, not exactly. A lot of people were actually wrong. It's not to balance long shorts. That's wrong. So this definition is wrong, completely wrong. um this is why, and the reason I say this is very wrong, and also this is the reason why a lot of people misunderstand funding. They think of it as a long versus short ratio. It isn't, right? High funding doesn't mean more longs, or doesn't necessarily mean more longs, and negative funding doesn't necessarily mean more shorts, right? It isn't a long versus short index. um so what it's basically is, it isn't to balance longs and shorts. It's there to balance the spot price and the perps price, right? That's the balance that the exchanges and markets want to achieve. They don't want to balance long and shorts. They want to balance the spot price versus the perps price. um, Now let's say, and why do I say that more higher funding doesn't necessarily mean more longs, is it's to bring the future price more in line with spot. Yeah, that's the definition, right? The reason I say that it's higher funding doesn't necessarily mean more longs is, let me ask you a question. If perps, when do you get a positive funding? So let's first go with that. So positive funding, if the funding is positive, it means that spot, okay, let's do it the other way. It means that the perps is trading at a higher price than spot, right? So the perps price, I'll label it with a P. So this perps price is greater than spot price. That's where you get the positive funding. On the other hand, let's use just a positive sign. So in case of negative funding, it means that the perps price is trading at a lower price than spot price, right? Now let's start with positive funding, which is most of the time the most misunderstood one, right? Um, what possible scenarios can you think that could make perps trade at a higher price than spot, right? Give me quick answers on what you can think of. What market participation or what market actions could lead to perps trading at a higher price than spot? FOMO? For God's sake, man. I don't want to be rude in the stream, but I want to know the specifics of the the participation, right? Uh, More long perps. rampant ape-like speculation. Again, I'm not asking about characteristic of the people that are trading or characteristic of the trades. I'm asking about the exact action that's happening, right? It's more longs, right? If there is bunch of longs that pile up immediately, it would result in perps trading at a higher price than spot, right? Considering spot is constant, spot doesn't go. There aren't as much of spot bids as there are perps bids, right? Which makes perps pair trade at a higher price than spot, right? That's one of the scenarios. And in that case, higher funding would mean that more longs are opening, right? But it's one of the scenarios. That is why I said higher funding doesn't necessarily mean more longs. What would be the second scenario of perps trading higher than spot? Because in first scenario you told me where perps are the reason why perps are trading higher than spot. It could be the other way around as well, right? It could be that perps were constant, it was just spot trading at a lower price which resulted in a positive funding, right? Spot selling, exactly. So if there isn't much of change in the perp side, and actually the perps are just like covering, or they are just staying flat, there isn't much change in OI. And how do you gauge perp change? For that I taught you OI before, right? Through OI you judge what's happening with the perps position and the longs, right? And when you look at the flow, a lot of time you see that even though the funding is going positive, but it's not due to more positions opening, or it's not due to more longs opening, it's just because of some major spot selling happening, right? Which causes the funding to become positive. Because remember, funding isn't a long versus short indicator, it's perp price versus spot price, right? So yes, one of the reasons could be more longs, but the other reason could also be spot selling and longs not doing much, right? That could also result in a higher funding. Or yeah, that's pretty much it. Another thing um, is it possible that on one exchange spot is high while on another exchange perp is high? Probably only for less. Yeah, it's most of the time for less liquid, because for higher liquid assets and higher volume assets, the arbitrage usually doesn't exist, because if there is difference in prices in between exchanges, there is arbitrage that people can benefit from, right? And in most of the common assets, most of the assets that people that have what you will say traction and volumes, those don't present such obvious arbitrage, especially in these conditions, right? Arbitrage used to exist back in the days when the markets weren't as efficient as they are now. They don't unless it's something really bad happening with the devs, and some bad behaviors happening on certain exchanges. Most of the time you'd get similar price actions on most of the exchanges. It can for sure, but the delta usually gets arbitraged away. Yeah. So same goes for negative funding, right? So negative funding, what is negative funding? That spot is trading at a higher price than perps. That is what causes negative funding. Now, does negative funding necessarily mean more shorts? And my second question is, does more shorts necessarily mean that it's bearish or it's bullish? And we talked about the second question a while ago when we were talking about open interest. Does more shorts necessarily mean bullish? Which a lot of people tend to, right? I see a lot of people longing a coin just because its funding is negative, and their reasoning is negative funding necessarily means more shorts, which is wrong, and more shorts necessarily means bullish, which is also wrong, right? Because we talked about before on how shorts can keep profiting in a downtrend, and fundings could remain negative in a downtrend, same as fundings could remain positive in an uptrend, right? For I'll give you an example. When was the last time you people faced some good positive prolonged fundings, prolonged positive fundings on alts and majors? When was the last time you remember? If you can give me a month or a week. If I try to remember, it was probably in December and January, right? When we had elections. November also, right? So November, starting from the November rally. That's the last time you remember having positive funding on alts and majors, right? Now, what's the misconception overall? That positive fundings are bad, right? Positive fundings are bearish. If positive fundings are bearish and positive fundings are bad, then why is that the most profits you could have had on your longs was when the fundings were positive, right? When the things were going up, the things were heated, and you had positive fundings, which was during November, December, and max like till January, right? Since then, things have been bleeding. Since then, things have been ranging. Fundings are either neutral or negative. Now, are those neutral or negative fundings giving a good return on longs? No, they are not, right? So there is a big misconception of funding, higher funding mean being bearish and lower fundings mean being bullish, right? Um, so that's another thing to keep in mind on is that trends come with fundings, right? You have to pay some fees for you to be riding that trend, right? And that isn't bad as long as the price of asset is increasing at a higher rate than those fundings. You can always afford paying those higher fundings, and you can keep on profiting with the along with the higher fundings riding that trend. So same goes for a negative funding as well. A lot of people say that negative funding is bullish and let's long and let's counter trade, while similar to as strong uptrends come with a positive funding, strong downtrends also come with a negative funding, and it isn't something to counter, right? It's not something bullish. It's the same concept as you have positive fundings in uptrend. So a lot of time you'd see me calling shots on a coin that already has a negative funding. And I actually got a question a day or two back. I think which coin it was. I think we shorted AIXBT or something, and it actually had negative funding. And despite negative funding, it was the most weakest alt on the market, and which kind of tells you that how good downtrends, weaker price action is good for shorting, right? And those do come with negative funding, and it isn't anything wrong to be shorting a coin that has a negative funding, right? So just don't fall into these misconceptions. Another thing I would say is there are some certain scenarios where positive fundings could actually be bad, right? As we said, most of the uptrends do come with positive funding and they're not bad. But there are certain scenarios where things go to a bit of extreme, which would be that let's say that you have a good trending price action that's lasting for a few days to maybe even weeks now, right? Things are going up every single day. There's 10 to 20% increase in price every single day, and that increase in price and that trend is coming with funding increasing as well, right? Funding gradually crippling up. But to me, as long as that uptrend, as long as that increase in funding is accompanied by a strong price action, I really don't care about that higher funding, right? Because let's say you are a market participant in that uptrend, right? You wouldn't bother about those high fundings as long as the increase in price is paying you for those fundings, right? But then let's say that after a week of strong rally, the price begins, instead of a strong uptrend, the price breaks from the trend. And now instead of it gradually and gradually grinding up every time, now it begins to break down and bleed and range and distribute, right? And now during this price action, the funding even begins to cripples at a higher rate, right? Now this is something that's problematic, and this is something that most of the time causes flush, right? Because earlier you did have price going up that supported higher fundings, right? Because if you are a big whale that's long on that is long on that particular asset, you wouldn't mind higher funding because that increase in price is kind of paying for your higher fundings, right? But then comes a time that the price is no longer trending, right? Market now needs cool off, things are looking super heated, and you are judging it by a fact that now it price isn't trending anymore and it's actually ranging or bleeding or distributing, whatever, right? And now, if this is also accompanied with spot CVD, and how do you access spot CVD? We did talk in the start of the stream through Coinalyze, right? And you also see that all this is also accompanied with spot selling, right? So now you have two bearish confluence. One is that funding alone isn't bearish, right? Again, do not confuse that funding increasing as bearish itself. It isn't, right? We had talked about how fundings could remain heated for weeks while price could continue going up for weeks, right? Now we are talking about some other bearish confluence when you combine those with funding, higher fundings, which is one, that price is no longer trending. The price isn't increasing at the rate to pay for those higher fundings for those big positions, right? That is first bearish signal. The second is that now you also have spot selling into those perps bid, right? So even though you have FOMO longs and people wanting to long this distribution, one, the price isn't going up to pay for those high fundings, and secondly, there isn't enough of spot bids to sustain those aggressive perps bid, right? These are the two factors. When you combine them with higher fundings, that's something that indicates you of a flush, right? So if you those who went through this entire cycle, and I can explain through multiple examples where we have not gotten a good flush in a long time. I think the last time we got was this, right? This was a good flush day back in the day. So what happened is, and I'm pretty sure this is where like Trump won, right? Or he was about to win. He was getting all the majority. We started pushing up, and since this price action, the funding started getting positive, right? And I remember waking up the next day and everyone was like, the fundings are high, let's not FOMO long, and this looks bearish, fundings are creeping up, OI is piling up, while things kept on going up, right? This is why I'm constantly stressing on the fact that higher fundings necessarily doesn't mean bearish, because if you were the guy who believed in higher fundings being bearish here or here, you would have missed this entire rally up, right? On the other hand, eventually when price tapped 100k psychological level and we began to consolidate, that's where things got a bit tricky, right? It was that when you got the highest increase in funding within this accumulation, the price was no longer trending strongly to pay for those high fundings. And meanwhile, you also start to see some spot selling happening, right? I remember back in the days around these 100k psychological level, you used to have good CB and Binance spot bids selling into those perps bid, right? When you combine those two factors together, that brings a good recipe for a flush, right? And if you are not careful during a flush, you see people wiping out their entire crypto net worths within those flushes, right? So most of the time funding alone doesn't tell you much, but if they do get to extremes where price isn't there to support the fundings, where the spot bids aren't there to support those perps bid, then you start to be a bit cautious. Then those fundings start to act as a negative signal and as a bearish signal, right? Because if you are a big whale and now the price isn't paying you for your high funding, eventually you would be forced to capitulate your position, right? Eventually you would be forced to get out of a big position that you are holding for days now, because now you are just paying those high fundings every day, yet the price isn't going up, right? Eventually you'd have to capitulate, and that's what causes flush. So yeah, I hope I wasn't going too fast, but that's pretty much I have on fundings. We talked about what funding is, how you get positive fundings, how you get negative fundings, how funding alone shouldn't be gauged as a bullish or a bearish signal, how you need to look at OI and market positioning to build up a story around fundings and positions, and how do you set directional bias based on that. Um, Shit, my bad, DB. Sorry. So I just got too much involved into this. So yeah, that's pretty much what we had. DB, just give me like 3 minutes if you could communicate to Rego as well. Within 3 minutes, I'll wrap it all. So I think next time I'll take out a slot where we have a bit more than 1 hour for this. But that's pretty much I had, to be honest. The only thing that's left that I wanted to talk about is the shitcoin thing. That's something I'll either try to explain in my corner, or if you go into the education section of the Discord, you find there the how do I use these fundings in OI combine and CVDs combined to be trading some shitcoins as well? Because the most of the things we touched right now is having directional bias based on these factors, right? Another useful way of the another useful use of these data factors is to be trading some alts and shitcoins, right? That's something we can touch in either the next stream, or I'll try to explain a little in my corner. But yeah, that's pretty much what I had in my mind. Any questions, you can always tag me in the active questions, or you can tag me in the charts ideas. Anything about the stream today, if you took notes and if you're confused about anything, you can try asking in charts ideas and active questions, and I'd be there to help. I've already taken like 10 minutes from the next stream that was scheduled. I don't want to take anything further. So that's it from my time. Hope people had a good time. Hope you people learned something. And yeah, take care. Let's wait for US Open now, and let's join DB and Rego stream. Have a good time. Take care, Allah Hafiz.